You know that feeling when you're on a roller coaster and you're not sure if you're excited or terrified? Well, that's pretty much Australia's construction industry right now. Hi everyone, Kim here from GeoTax. We've got a storm brewing in Australia's construction industry. The sky-high interest rates, contractor insolvencies, industrial relations issues, geopolitical drama, and shortage of labour is enough to make your head spin. Today, we'll be exploring the latest buzz in Australia's construction industry and what's happening in each state. Grab your hard hats because we've got some updates that could impact your projects and investments. First up, let's address the elephant in the room, the scandal surrounding the Construction, Forestry and Maritime Employee Union, or CMFEU for short.
The CMFEU has cut ties with Trades Hall days before a meeting was expected to kick the troubled construction division out.
Just stick to your guns. You will win.
A Brisbane worksite with unsightly workplace behaviour.
Bombshell allegations of corruption and criminal infiltration has led the Australian Council of Trade Unions to suspend the construction division of the CMFEU.
The construction industry was rocked by ABC's investigation into outlaw motorcycle gangs. As a result, the government placed all branches of the construction arm under immediate administration. While this news might not shock many, it's stirring up the industry, but some see this as a great opportunity to clean up the sector. Despite this drama, the market's holding steady. The ABS reports increased dwelling approval rates across most states, with New South Wales, South Australia, and Western Australia seeing rises in private sector housing approvals. But we're currently dealing with cards stacked against us. We're still seeing contractors include higher margins and preliminaries in their tenders to cover risk in larger projects. A shortage in skilled labour is also likely to persist for some time. This will be the catalyst for cost escalation on many projects going forward. The rate of escalation can vary and is driven by different factors, including availability, material costs, and the scale of the project. Here are the forecasted percentage changes for building prices across Australia. Sydney's looking at a 4% increase. Melbourne, Darwin and Perth are all at 5.5%. Adelaide and Brisbane are heating up at a 5% rise, followed by Canberra with a steady 4.5% surge. And finally, there's Hobart, sitting pretty at 3%. Now let's take a tour and see what's happening in each state's construction scene. Sydney. Starting with New South Wales, Sydney's property market is still going strong. Home prices are on the rise, though not as rapid as we'd seen in previous years. Houses are sitting at a median price of about $1.47 million, while units are hovering around $860,000. Despite more properties hitting the market, buyer demand remains robust. This is largely due to the low vacancy rates and high rental prices. The market's absorbing new listings like a sponge, keeping those auction clearances rates high. Indicators such as lower unemployment rate and potential interest rate cuts are also boosting buyer and seller confidence. However, the housing supply shortage still persists, contributing to the rise in prices and rentals. Moving to Victoria, Melbourne is telling a different story. The industry continues to experience negative issues such as labour shortages, company insolvencies, and increased costs due to the recent EBA wage adjustments. On a positive note, there are signs of the general material construction prices stabilising. As for apartments, the general consensus is that construction activity will stay steady, but it might be a bit subdued. Meanwhile, the build-to-rent general apartment subsector is positive and continues to increase from strength to strength. If you're in the industrial, health, or aged care sectors, you're in luck. Construction activity is still going strong and the future looks bright. As for the retail and hotels, things have been flat lately, but there are some early signs that things might start looking up in the medium to long term ahead. Brisbane. Brisbane's labour cost increase is the main driver for cost escalation in the current quarter, specifically for in-demand trades like building services. Approvals for private sector housing have taken a hit, but despite this, the construction cost escalation forecast for Brisbane is holding steady at 5% for 2024. Tender activity in the commercial sector has also picked up in public and private projects, with most sectors remaining strong. While some areas like industrial are competitive, large-scale projects are expected to see price increases as demand for key trades and services grows. Then you've got Adelaide's residential sector, which is going strong and will remain so into 2025. The state has also finally got a handle on those material supply issues, and yet they're still struggling with labour issues. The housing supply is also under stress due to delays in obtaining approvals and the time required to secure project funding. The non-residential sector is cooling off a bit, but the industrial growth is consistent and is expected to remain so till 2025. To meet the high demand for technical skills, the government has initiated the construction of technical colleges in metropolitan and regional areas. By creating interest in trade opportunities, it should address the ongoing skill shortage. Perth, Western Australia. Perth is getting tender bids for projects up to $10 million, with contractors and subcontractors more open to tender opportunities than the past few years. However, only a limited number have a record of delivering large-scale projects, resulting in extremely high bids. Material prices remain stable, with some price reductions in the supply of structural steel. But any savings will be offset by increasing labour costs in nearly all key trades. It's not all sunshine and rainbows for Perth though. Private residential project feasibilities are still struggling, with the exception of high-end apartments. It'll take additional increases to units and house price sales to attract the developers, most of whom are hoping for some easing of construction costs. Hobart's construction cost escalation forecast for the city is the lowest amongst major cities, sitting at 3% for 2024. Since COVID started, many projects have either been postponed or proceeded at an additional cost. However, we're finally seeing some results for those looking to build at an affordable cost. Having experienced shortages in both material and labour over the past few years, tender and quoting participation in Hobart has been at consistently low levels, which has resulted in inflated pricing. But here's the good news. Things are starting to change. There's now a much higher number of builders and subcontractors looking for work, leading to a slowdown of the cost escalation experienced in recent years. Darwin. The Northern Territory construction market is operating at nearly full capacity. Skilled labour shortages and rising wage costs are expected to continue across the Greater Darwin area and regional locations. Investments by the government in infrastructure projects and remote housing are fueling activity across the Northern Territory. Some key projects that are currently underway include the Northern Land Council new office, State Square Art Gallery, and ongoing remote homes program for regional Northern Territory communities. While Darwin's construction market saw some stabilisation in material prices in the third quarter of 2024, labour shortages, high demand, and rough economic conditions are still apparent. Pricing variations are still being seen across most trades, as well as in head contractor preliminary and margin costs. Last but not least, Canberra's residential building construction is expected to slow down until early 2025 due to high inflation and interest rates. The ACT government's plan on social and affordable housing has yet to impact the builders' workloads. However, if these funds take longer to enter the economy, it could greatly affect their ability to deliver homes quickly. As for the smaller commercial projects, they're either on hold or moving at a snail's pace. It's not all doom and gloom though. While experienced professionals are still in demand, there are signs that the shortage is easing. The civil sector and social infrastructure remains robust, thanks to large projects being planned and delivered the next 12 to 15 months. We've covered a lot of ground today, so let's recap the highlights from this quarter's construction industry update. The CMFEU scandal rocked the industry, with the government placing all branches of the construction arm under immediate administration. This bombshell has created further disruption, but many see it as an opportunity to clean up the sector. And if we look at the 2024 forecasted building price escalation, we're seeing increases across the board, with Darwin, Perth, and Melbourne topping the list at 5.5%. Labour costs are the primary driver behind these escalations, and this trend is expected to continue into 2025. While each state has its own unique challenges and opportunities, the common themes are rising costs, labour shortages, and a mix of competitive and high-priced bidding. If you want to learn how to adapt to the changing market conditions and make strategic decisions based on your circumstances, it's best that you stay informed. Whether you're a home buyer, investor, or builder, understanding the happenings and challenges in the construction industry is key to navigating these uncertain times. If you found this video helpful, hit that subscribe button and turn on the notification bell to stay up to date with the latest construction industry trends. Thanks for watching, and we'll see you in the next video.